So, what are the investment habits of successful investors? What you can learn from the top investors about investing in unit trusts and achieve financial freedom on your own terms. Welcome back to my channel, the channel for personal finance and money matters. Remember to subscribe to my channel and turn on the notification bell if you'd like to watch more videos like this. Let's begin. Hi, my name is Louis, your financial educator. Let us learn the secrets of successful investors. Here we'll understand the investment habits to follow to strategically achieve financial freedom on your own terms by investing in unit trusts. There is nothing trivial when it comes to accumulating wealth and investing, especially if the investors are confused between desired results and avoiding risk factors. Make a binding commitment. There are three options that every investor can use to make binding commitment. Number one, strategic asset allocation, also known as long-term characteristics, should rule the path to various asset classes. It is important that one should put the strategy before the tactics, which means invest in the strategy. Investors should decide on the basis of strategy if they want to invest in equities or in bonds, depending on what suits their risk profile. Strategic asset allocation can be implemented easily with the balanced portfolios. If everything is managed actively, it is easy for portfolio managers to make the tactical adjustments too, without letting the investors to worry about anything at all. Number two, the common rule that every investor should follow is to make sure that he should not put all his eggs in the same basket, which means he needs to diversify his investment. Every investor must have come across the term "never put all your eggs in one basket." However, not few investors actually follow this term. Usually, there is not a huge point to get hold of perfect investment every time and to make continued changes in your portfolio. However, you should not put all your investment in one single bond, equity, or asset. Number three, invest regularly. When it comes to saving plans, the rule is the same as to earn the risk premiums. It is important to take risks. It can be in terms of market risk premium, equity market risk premium, or inflation risk premium. Though there is no guarantee of the specific performance, there are three effects that can be tactically combined. Diversification effect. Making investment regularly will give you the chance to diversify in a basket of bonds or equities. The savings can go in different infinite multi-asset solutions. Investment diversification strategy is the key to earning high returns from your capital and is preferred by successful investors. Average cost effect. When it comes to paying exact amounts on a regular basis in the saving plans, basically means that the shares are bought for different amounts as they continue to change with the changing trends in the capital market. Compound interest effect. If you want to earn benefits from compound interest effect by reinvesting distributions, then you should save for a long period of time. Invest, don't speculate. There's no need to track price movements as well as market. In order to find out what is the perfect timing to go in or out, there is no one who will call you and explain to you when you should invest and when you should not. However, if you are serious about accumulating the capital for a longer period of time, you would stop speculating and start investing. When it comes to speculation, it is like betting on the price movements but in short terms. On the other hand, investing is all about putting your capital in some work that could give you benefits in the long run. If you take the example of European equities, you'll see that the diversified investments have been made if investments are made in a diversified manner for 25 years. On average, you would have earned 8% return on investment. However, if you sit back and just wait for the better prices and waste 20 best days, then you have gained only 2% or less. On missing 40 best days, the loss will be 2.3%. It's better to make your money do the work. Moreover, when it comes to missing some of the best days, it is extremely high risk. Investment solutions governed by purchasing power preservation but not security. Your investment decisions should be governed by purchasing power preservation rather than security. The world seems to move around the idea of security, and the term security is mostly used as a safe word when there is no price fluctuation. During the past few years, the equity market is the one that has sent investors on the roller coaster ride. In the circumstances, it is understandable that investors prefer to avoid the price fluctuations. However, they are so busy with being safe in terms of price fluctuation that they almost overlook the risk of losing the purchasing power that happens to be very unpleasant given the fact that currently the interest rate on the savings is only 1% plus minus. Research and check your investment decision and then stick to it. Taking risks while making investments is one of the common things that successful investors do. However, what they don't do is go in blind. A successful investor prefers to do his research before he is ready to make an investment decision. Investing itself is a tricky thing in which you are expecting for some benefits in the long run. It will be a complete disappointment if you don't end up with the best return on investments as you expected it to be. This is the reason that you need to research a lot. Before signing any investment deal, make sure you have read all the terms and conditions, and there are no hidden charges that might pop up when you start enjoying the benefits that were promised. The next thing that you need to do once you have made your decision, you should stick to it. Your research means nothing if you are a double-minded person and do not have any ability to stick to your decisions. The investment is all about firm decision-making skills, which is why you need to stick to your decision. That's the investment habits of successful investors. Like this video if you find it useful and remember to subscribe to my channel. Thanks for watching, see you in the next video.